This is The Age of Trade. I'm Paul Allen in Sydney.
And I'm Annabelle Droulers in Hong Kong. The top stories this hour. US futures jump along with copper as the US appears to take a softer tone on renewed trade tensions with China, opening the door to talks. President Trump saying the November 1st deadline remains for higher duties while praising Xi Jinping, even as Beijing threatens retaliation. The president now on his way to Israel for the planned release of Hamas hostages, saying the war in Gaza is over and he believes the truce will hold. Plus, Japan's Natixis facing a major political crisis as her governing coalition collapses before she's even secured the role of Prime Minister.
Yeah, what a way to start the week, Belle. But let's start on that latest US-China tension, and perhaps the US striking a more conciliatory tone now than we heard, a few hours earlier. J.D. Vance, the Vice President, now urging China to choose the path of reason, says the US holds more cards here, but if China responds in an aggressive manner, so will the United States. President Trump there also been active on Truth Social, essentially saying, don't worry about China, it will also be fine. He's also been praising Chinese President Xi Jinping, and he had a few words to say about that earlier as well. Let's take a quick listen.
I think we're going to be fine with China. Look, I have a great relationship with President Xi. He's a very tough man. He's a very smart man. He's a great leader for their country. He's a great leader, and I have a great relationship with him. I think we'll get it set. I know what happened. I really understand what happened, and I'm not even saying he's wrong. But then we met him with something much tougher than what he did to us. Again, because of the tariffs, it's much tougher.
So you see that softer tone, Paul, really being felt in markets because that taco trade, Trump always chickens out, is very much being priced in. But at the same time, it is important to reflect on what we heard from China over the weekend. And this was really them being quite clear. They want the US to be backing off. They're warning of retaliation as well. So essentially saying that they will threaten, or that the US rather should stop threatening with higher tariffs. It is interesting, I think, two things to note as well. Firstly, the fragility of the trade truce. I think that's very much been underscored over the past 72 hours. But secondly as well, and this part is important as well, that the Trump administration essentially needs to come to terms with the fact that China this time around is a lot more confident and certainly calling the shots as well, very much on a par with what we saw with Washington in Trump 1.0.
Yeah, you mentioned the taco trade there, Belle, and we're seeing that reflected to some degree in some of the moves in currency markets as well. We've seen the yen soften a little. Risk currency, the Australian dollar, has been strengthening, in fact. So perhaps an expectation among forex traders that this could play out fairly quickly. We have just opened for trade here in Australia as well. We've got the ASX off by about 0.5% at the moment. The worst performing stock on that index, Treasury Wine, off by more than 11%. Reason being, it's just scrapped guidance for 2026, saying it's also paused its share buyback due to US-China tension, just saying it can't have any confidence in that earlier guidance that it gave, Belle.
Yeah, and also taking a look at what's happening in broader assets. We've got US bond futures very much the focus for us today. We have actually seen futures falling. Japan's going to be shut today as well, so we won't have live pricing. But essentially, futures are going to be one of the key assets to track, especially because it could be sort of the default asset to try and find support. It's a lot of fragility still being reflected across equities, other bonds, FX as well. What else we're tracking in the session? Certainly continuing to keep a watch on gold there, hovering or still staying above that $4,000 an ounce mark as well. VIX futures as well to track above the 20 line.
Right, well, joining us now is Garfield Reynolds, who leads our Markets Live coverage here in Asia. And Garfield, a lot of major markets closed. Japan, of course, the US going to be closed later for Columbus Day as well. So in this environment, I guess you're watching Treasury futures pretty closely. And are we going to see a move like we saw for Liberation Day back in April?
Well, no, that's one of the interesting things that's going on, Paul, is that, if Liberation Day, Treasury sold off with other assets. This time round, they rallied strongly. And also this time round, yes, they've declined a bit this morning, but it wasn't a large move lower, and since then it's even paired that move. So Treasuries are acting like a haven again. And part of that is because we've had one rate cut, the Fed signaled more are coming. It's made it clear it's much more worried about the state of the US economy, its fragility, than it is about inflation concerns. And again, tariffs have not fed through into a dramatic increase in inflation. Yes, there's been some pressures, but not dramatically feeding through. So with all that, and with the fresh volatility in Trump's announcements about his response, China rolled out a series of extra restrictions on rare earths and on the port fees for the US, did it in quite a deliberate manner. Trump then on Friday night turned around and sort of really blew up at them, made some very aggressive statements. Now he's already walked those back, but he's still trying to keep it all on the table. So the US side of things is looking extremely volatile, and as Belle earlier flagged, China is looking like it's more confident now than it was before, that it's to some extent running things more than President Trump is. So that means it's also going to be interesting to see how Chinese markets open, but more than anything else, it puts the pressure once more on US assets, including treasuries in particular.
Yeah, Garfield, you mentioned how China's going to come online. I think we saw ETFs, for instance, linked to Chinese stocks dropping quite considerably in the US on Friday. But is it going to be the same story, do you think, for Asia today? And also what happens for other trade-sensitive markets, Korea and also Taiwan?
Yeah, well, Korea and Taiwan look likely to have a poor day. TSMC's US traded ADRs, TSM, they dropped a lot on Friday, which was a holiday for Taiwan. So Taiwan had not been open. That's likely to do some damage to not just TSMC, but to Taiwan equities more broadly, at a time when we have had the AI bubble fears going on. So there's been some frenetic trading in all of that. And even if you think that ultimately you will get a taco situation, you don't get those tariffs coming in on November 1, the ongoing concerns about NVIDIA and its capacity to earn revenue from China amid all of this, that's going to continue to weigh on the AI space and especially on Korea, on Taiwan. With China had a very bad Friday for the equity market, driven by some internal concerns about its own AI boom. Definitely a theme going on here. But we'll see, what's going to happen with the broader Chinese market, especially if it does drop. China does have one arrow in its quiver, which the US doesn't. The so-called national team could readily come in and put a stop to any major sell-offs, even if those are coming there, even if we don't get a rebound because of that more conciliatory tone from President Trump.
Yeah, we'll certainly be watching those national team-linked ETFs throughout the session. That was Garfield Reynolds there, who leads our Markets Live coverage for Asia. Let's get more on those trade tensions now and bring in Alicia Garcia Herrero, Natixis Chief Asia-Pacific Economist. And Alicia, we were just talking there with Garfield and at the top as well about how China this time around looks a little bit different to China during Trump's first administration. That extra confidence we see perhaps from Beijing, do you think it's warranted given the economic backdrop facing the country?
It is warranted in as far as Trump is basically struggling with a strategy to contain China. But at the same time, that extra confidence could be quite detrimental down the road if China really thinks it can dare increase export controls to the level that has been announced. Not so much because the U.S. may retaliate with 100% tariffs, maybe not, but because it would create havoc to the global economy. Also to China in a way, because there's no way China can avoid these huge disruptions in supply chains having an impact on its own economy. So in a way, China could be a little bit of a, dine of success, if you ask me, in terms of how it is approaching the U.S.
The fact that China's been also able to reroute a lot of its trade that would have maybe once gone to the US over the past few months, does that also, lead it to be more confident as well?
Yes, well, this is something that China started doing under Trump 1.0. I think China knows that there is a limit to that because we're still pending these tariffs. Basically, Vietnam does have 40% tariffs already on transshipping, but others could, because that was Trump's basically original idea with the reciprocal tariffs. They have not been fully implemented, except for Vietnam, but they could come. So in that regard, again, China's excessive confidence could be a problem if they continue to reroute their exports through other markets.
What's your outlook for the yuan? To what degree has a weak yuan been helping China? And do you think we're going to see that trend continue? Is there going to be more devaluation for the RMB?
Yeah. Well, I think the RMB needs to trade very carefully because it's already very weak against other currencies, especially euro, all of the kind of European currencies, UK, etc., British pound. All of those currencies have actually taken the brunt of a weaker dollar, but the RMB hasn't. I think the RMB will probably continue to trade close to the dollar trend and still depreciating against a lot of other currencies in the world, which happen to be China's largest competitors. This is Europe. So that's already good enough for China. They don't need to go beyond because that could create all of a sudden capital outflow. And that's not something China wants to see at the current juncture.
And of course, China in the grip of a deflationary issue as well. And we're going to get CPI data later on this week. How is this going to help or hinder policymakers? What's the next move here? Because China's got a few more levers to pull in this regard than perhaps the US.
Yeah, I mean, China's deflationary problems are truly domestic. If anything, U.S. policies would, in any event, help China reduce that deflation in as far as China could find other markets. That's not really the problem. The problem is China's kind of obsessive quest for additional industrial production. We saw a little bit of a dip there in the latest data, but we're waiting for more for September. So we should be seeing, hopefully, that trend which started in August of a slightly weaker industrial production. That will help really abate these deflationary pressures. But of course, still I tend to believe that China still wants to reach this 45% market share in global industrial production, which goes exactly against the idea of easing basically this pressure, the downward pressure on inflation. So it's kind of having two objectives at the same time, which cannot be achieved.
Alicia, I want to ask you as well, because we're really seeing some quite significant moves this morning in rare earth stocks that are trading so far in Sydney, and we saw China, again, ratcheting up the tensions on this front. How do you think that they're going to use rare earths in the bargaining process as well?
Well, that's surely the biggest bargaining leverage that China has at the moment. I think what they announced on the 9th, this massive increase in export controls, both in terms of the number of rare earths that were covered, but most importantly on its extraterritoriality, very much in line with what the U.S. has for its own export controls, will probably make it very appealing to find producers and certainly refiners of rare earths elsewhere. That is where the U.S. is heading. Australia is clearly an important market for that. And I think anywhere else where these rare earth metals can be found will be doing well in terms of market valuations, etc., because the U.S. will be chasing those markets. So China will continue pushing, but the U.S. will diversify. This is what's going to happen. And this is basically bifurcation of supply chains down the road.
All right, Alicia Garcia Herrero, Chief Asia-Pacific Economist for Natixis there. Now, Alicia mentioned their rare earths, and they are on a tear in Australia this morning. We've got Luca Resources, Linus, both up by about 5%. Not on that board is a much smaller company, Arafura, which is up more than 18% now. Few factors driving this, of course, not just the trade tension between the US and China, but also the Australian government is considering a $780 million mineral reserve investment around rare earths as part of a deal with the United States. And in a week's time, the Prime Minister, Anthony Albanese, is scheduled to meet with President Trump. Gold stocks also doing well. Among the best performers here, we've got Evolution now up by more than 3%. Also, Newmont Gold and Northern Star performing pretty strongly. The gold price initially dipped below 4,000 an ounce on Friday on the news of the Gaza deal. Well, it's back above that now, 4,051 at the moment. Now, I want to talk about Treasury wine as well, another casualty of the US-China tension reigniting. Treasury wine estate scrapping its earnings guidance for 2026 financial year due to uncertain outlooks in two of its major markets, those major markets being the US and China. It's also going to pause a planned share buyback that was just 15% completed. So Treasury wine off more than 10% on that news, Bell.
Yeah, and just a quick check on what's happening with ANZ as well, because we've got the investor day that's underway this morning. So we've got the CEO and the CFO of the bank on a call with analysts and investors outlining what is a planned overhaul, essentially, of the Australian lenders. So some of the key headlines so far, that ANZ is planning to halt its stock buyback. It's also looking to add more bankers as part of its push to lift performance, looking to as well reduce duplication across the bank. So far, we're not seeing too much reaction, but the stock is a little weaker. We'll get more details on that just ahead. This is the Asia Trade. You're watching the Asia Trade this morning and taking a look at what's happening with the Japanese yen. Also, Nikkei futures trading in Chicago this morning. We do actually have Japanese equity markets that are shut today for a public holiday, but it's going to be very interesting to track the trading dynamics when we do get trading resuming tomorrow. Given there's two factors. Firstly, you've got the US-China trade tensions and the impact that that's going to be having across global markets, or has been having across global markets. But you've also got a very long-standing coalition collapsing between the LDP and Komeito as well, Paul.
Yeah, for more on that, let's get to our next guest, Amy Catalinac, Associate Professor of Politics at New York University. Amy, a real political mess in Japan at the moment. Can you give us a sense of the significance of that breakdown between those coalition partners of 26 years, the LDP and Komeito? How long can the government now survive? And if it does survive, how effective can it be?
Yeah, so this is really a political earthquake in Japan. So the Komeito's announcement on Friday that they're not going to be supporting, the coalition is done, and they're not going to support the current leader, Takaichi Sanae, to become Prime Minister, means that in 2 weeks' time, it's no longer certain that she's going to be able to win that vote and become Prime Minister, which means we could have a completely different coalition of parties at the helm of the Japanese government. And that is really significant because for the last 70 years, there's only been 4 years in which the LDP has not actually been at the helm of government. So the LDP has been in a coalition with the Komeito for 26 years. That coalition survived a period in which they were both in opposition for 3 years. But now the Komeito's announcement means it's just very uncertain. We don't know. It could be her. She could get together a group of parties, or at least one party, to support her and become Prime Minister, or it could be different parties. It's very uncertain at this point.
And in that environment of uncertainty, where would you place the chances of fresh elections for the LDP to say, you know what, we're just going to seek a fresh mandate?
Yeah, I don't think that's very likely, especially without the Komeito's support. So the LDP right now is not in good shape. It's just had two national elections, one last year in the lower house and one recently in the upper house. And they lost their majority in both houses. This just doesn't happen. But you might think that the leader could just dissolve the House and call for a new election. But the LDP has actually been very dependent on the Komeito since the beginning of the coalition 26 years ago. So the coalition, the parties are really tied together closely in elections. So the Komeito contributes a certain number of seats to the government. At the moment it's 24, it used to be 32. But even more significant, the Komeito and their supporters underpin the victories of many LDP politicians. So Japan has 289 single-seat districts, and it runs candidates in many of those districts. And many of those candidates, they are made much more competitive by an extra 10 to 20,000 votes that the Komeito supplies. So my guess is those politicians right now are really not going to want a new election. I think that's sort of an unlikely part.
Amy, then how likely is it then that the Komeito and LDP come back together?
Yeah, so I think it's possible that, so my interpretation of one interpretation of what's going on right now is that the Komeito have sent a pretty clear signal of they don't have confidence in the current LDP leader. So they've said that they like many people in the LDP, they don't like this particular leader, and so they're withdrawing support for her. They don't want to be in a coalition with her. So one interpretation of what's going on is that they're sending a very strong signal that they're unhappy with the leadership. And there are reasons. There are reasons why they will point to they don't think their concerns and their interests are as front and centre in the current leadership than they would like them to be. And if that's the case, we may observe her, if she were able to become Prime Minister, we may observe that being relatively short-lived, and the two parties coming back together. I think that's not unlikely that would happen. Not soon, though. I think it would take a while for that to be worked out.
So is there a path for Takaichi to retain power and stay at the head of the LDP party? Yes. So she could win the prime ministerial vote. It's going to be held in about 2 weeks. Actually, we don't know exactly when it's going to be held. It's been changed. But if she peels off one party in the opposition, she gets that party to support her, she could become Prime Minister with the support of that party. She also has to prevent the opposition parties from joining forces and getting the votes together to elect their own leader as Prime Minister. But we're observing a lot, like every day the news, it's only been 2 days since the announcement, but every few hours there's different pieces of news that suggest it's very murky as to what's going to happen. So sometimes I think the opposition may get its act together and put a candidate forward for Prime Minister. Other times I think, maybe she's going to be able to make it work. But I don't think I think it's likely that her administration might not be very long in power. Mm-hmm. Amy, really fascinating insights there. That was Amy Catalinac, Associate Professor of Politics at New York University. And we'll have more ahead on the Asia trade. This is Bloomberg. Taking a look at cross assets this morning, and you can see here really what's being priced in is that the trade spat may extend. Now, you see that being most reflected in gold prices today because they're continuing to climb. Otherwise, you have some sense of relief coming across other assets. The VIX, for instance, those futures are steadying here. And we're seeing as well US equity futures, little change, keeping a very close watch on treasuries as well, given that you did see really that path for US bonds looking to go higher in the weeks ahead.
Let's take a look at how commodities are tracking. We're seeing a rebound for both oil and copper prices as the US looks to soften its tone a little on the fresh China tariffs. President Trump saying not to worry. He indicates a willingness to reach a deal with China while also heaping praise on President Xi. So some hope that maybe this latest round of trade tension could be short-lived. We've got Brent at 63.33, copper staging a rally on that news as well. But interestingly, gold still pretty strong. It's closing in just below that record price, $4,047 an ounce right now. We did see a drop below that level on Friday on the news that a tentative ceasefire had been reached in Gaza. Now, on that point, President Trump has repeated that the war in Gaza is over, and he expects the truce to hold as he travels to Israel to seal the biggest diplomatic achievement of his second term. Trump will speak to Israel's parliament, the Knesset, later on Monday.
It's the first time everybody is amazed and they're thrilled, and it's an honor to be involved, and we're going to have an amazing time, and it's going to be something that's never happened before.
Right, Bloomberg's Michael Heath is following developments for us. So, Michael, what's the plan when President Trump arrives in Gaza?
Well, Paul, he's basically his arrival sort of timing with all things being well, the release of the 20 living hostages. The Wall Street Journal sort of put an actual number on that. We'd heard that for many months that Israel understood that there were about 20 alive, and that seems to be the case. So they're due to be released in the morning, and then, as you mentioned, that President Trump will speak at the Knesset, and then after that he's going to Egypt, to Sharm el-Sheikh, where there will be a peace conference and presumably some sort of signing ceremony. So it's a bit of a whistle-stop tour, but as he said, it's very, very significant. Just the fact that these hostages who've been trapped for 2 years, and obviously the population of Gaza who've just been in a very, very severe war zone. It's good news for everyone there.
This is obviously the first step, and the challenge is going to be going beyond that. What are some of the key details that are still up in the air, Michael?
Yeah, Annabelle, what you say is right. It's very, very significant. Obviously, it's significant, this first stage that they've got, as I mentioned, but, there's a lot up in the air. And one of the pressing ones is just to, for President Trump to ensure that once Israel gets hold of these, gets its hostages back, that it doesn't resume the fight. Now, that was put to President Trump, and he was very confident that that wasn't going to happen. But the other ones are, Hamas is supposed to disarm. Hamas isn't supposed to be part of an administrative a Palestinian sort of administrative group that will oversee Gaza, and yet what we've seen is once Israel sort of stopped its attacks, that Hamas gunmen and officials are out patrolling the territory, and that it's sort of not clear how that's going to work. Also, how far Israel pulls back, just how those details are going to be formed is going to be interesting to see, and it's very classic President Trump in that he's here for this whistle-stop tour, but a lot of these very, very significant details beyond the initial one still remain unsettled.
Yeah, at the moment, it seems the main thing that Hamas and Israel have in common is exhaustion, war weariness, but all the drivers that got this conflict going in the first place are still there. How long can this stick? Yeah,
I don't want to make any predictions, Paul. It's a pretty joyous moment that we have, that the war will come to an end. But look, you've seen Israel, in a sense, moving further and further to the right, and just, the settler groups who are now part of the government, with Hamas as well, if it is demilitarised, whether a new radical group arrives, everyone sort of seems to be moving toward the extremes. So you sort of want them to be going the other way to find some sort of solution. So, the portents aren't great there, but, perhaps, as you say, the exhaustion has set in. And then, if there is some sort of reconstruction in Gaza, if there's some sort of hope for people, perhaps there is an opportunity there. But you're right, the general direction doesn't look hugely positive.
That was Bloomberg's Michael Heath there. And shifting to Malaysia now, because the second Minister of Finance says the country's economy is being supported by strong private consumption. Speaking to Bloomberg, Amir Hamzah Azizan also said that the resilience of the Malaysian ringgit reflects the economy's solid fundamentals, and he expects foreign inflows to continue.
If you look at it, we are first half year, 190 billion of FDIs coming in and approved investments. We're seeing domestic investments also growing well. We've seen, if I use as a proxy, and I look back at EPF as a proxy of formal employment, EPF's contribution rates have gone up. It's growing at 9% compared to the previous year. So that's a sign that employment is still good. my money is still being pumped into the system. And the interventions that we're doing to lift the flow so that the citizenry has money in its hands are also helping drive private consumption. So I think those elements have actually created resilience in the Malaysian economy. And therefore, people look at Malaysia in a slightly different form. And then with the slowing down of the growth of interest rates in other countries, particularly the US where they have been cutting, that's allowed the differential to get smaller, so the ringgit has equally strengthened.
Do you expect the inflows to pick up speed and further boost the currency in the next 12, 24 months?
I think it was important for us to make sure that 2026 is a year that we have enough built in to sustain the domestic economy. So I think that resilience will actually show value to investors going outside. The government fiscal reform is showing value to it. So we started off with a fiscal deficit to GDP of 6.4%. This year will end up at 3.8, next year will down at 3.5. So there is resolve. And if you see at all the reforms that we've been doing, it's about putting in fiscal discipline is coming in. And those are good signs to investors that are coming in. We've had a stable government, clarity of policy, and that's helped to attract investments.
So supporting the currency, the thing is, the ringgit's performance is also contingent on the dollar, which also depends on what the Fed does. Right now, expectations are perhaps for 2 cuts. But that may not happen. How do you see that playing out into your currency?
Well, even if you look at this year, there were expectations of further cuts, and further cuts didn't come in, right? But the ringgit still stayed resilient, because the fundamentals are still strong, and the differentials have remained quite reasonable along that line. So I think even if the Fed slows down its process, the ringgit still has a lot of wind behind it to be able to push ahead along the way.
Tariffs are a big uncertainty. You saw how, President Trump is imposing additional 100% tariffs on China, taking it to 130%. This is your largest trading partner, contributing to about 17% of overall trade. And some say 130% tariffs would mean stagflation, supply chain disruptions. How might that impact the Malaysian economy?
I think we've seen what's transpiring with the changing tariffs in the first half of the year. And when we started the journey early on in the year, the signals were tariff is going to come in, it's going to rattle the markets quite dramatically. Countries will have to do dramatic shifts in order to manage it. But over time, practicality started to come in because it's a very much more integrated supply chain that we're having on a global scale. So I think this recent shifts will probably also find a better landing in the not-so-distant future, and we'll come back to what is probably a practicable solution. And I think both sides are figuring that one out. So from a Malaysian point of view, the key is to actually understand what is the components of our trade. And our trade are E&E and semiconductors, but we also have still the commodities and so on anchoring the trade. So if we continue to do those well, semiconductors, which is a very narrow supply chain, continues to tick on a better note, I think we'll be able to ride it out.
That's Amir Hamzah Azizan, second Malaysian Minister of Finance and Economy, speaking exclusively there with Inside anchor Haslinda Amin. Let's check in on some of the big movers here in Australia. It's really a who's who of gold miners and minerals miners this morning. The gold rally perhaps needs no further explanation against this tense geopolitical backdrop and the reignition of trade tensions between the US and China. Spot gold closing in on that record again right now, 4,041 an ounce. There's a bit more to the rare earth story, however, not just the tension between the US and China, but also the Australian government now considering a $780 million minerals reserve investment as part of a deal with the United States. That, according to media reports in Australia, as on the weekend. So a few factors driving rare earth stocks higher. You've got Lynas there better by 5.5%. Bell.
Yeah, and we saw a very late day sell-off as well in tech stocks and very much bearing the brunt of these US-China tensions on Friday in the session. But we can also see that being reflected in pre-market activity. This is Samsung, SK Hynix. You can see both of these that are under pressure. So, well, that's the last trade for them, but they're also under pressure in pre-market trading this morning, continuing to extend their drop. So we'll get more details as those markets start to come online at the top of the next hour. But certainly tech is going to be one of the key sectors to watch today as well. So we'll have more ahead on the Asia trade. This is Bloomberg.
Let's take a look at how some of these key currencies are tracking at the moment. We saw a little bit of strengthening in the Japanese yen now, 151.95. I use that word relatively speaking, though, but the moves in the Aussie dollar have been interesting as well because, of course, the Aussie is somewhat of a risk currency, now closing in on 65 cents against the greenback, which sort of suggests, well, maybe this taco trade gaining a little bit of momentum, and we have heard some conciliatory words from President Trump and Vice President Vance after this tit-for-tat cycle of tariffs between the US and China. We'll be closely watching the fix on the yuan today as well. Just look for any indications that China might be devaluing its currency. All right, let's get to our next guest, Ray Attrill, Global Head of FX Strategy at National Australia Bank, joining me here in Sydney. Great to see you, Ray.
Morning, Paul.
I just want to start on that idea of the taco trade. We do have a chart here on the Bloomberg that illustrates that, a little bit of yen weakness, a little bit of Aussie dollar strength there. Bitcoin also selling off. What do you make of these moves? Is the FX market just taking all of this latest tension in its stride?
Well, I don't think it's taking it in stride, certainly compared to where we were when we went home on Friday. There's still some pretty pronounced moves there, not least, of course, in equities and the rally that we've seen in US Treasury bonds. But obviously the market's still got the April events fresh in its memory, and those that wanted to sell the family silver, after the various reciprocal tariff announcements, quickly, came to regret that in terms of the vigour of the rallies and reversals of the moves that we saw basically within a couple of weeks as we had that kind of China-US trade détente. And as you noted there, we've clearly heard some words from President Trump, since his pronouncements on Friday that do perhaps give some reason for optimism that between now and the end of October, when President Trump was scheduled to meet with President Xi, that maybe things can be smoothed over. Although, China, you have to say, seems to have the whip hand here, certainly in terms of that US dependence on the whole rare earth and permanent magnet supply chains, basically. So, I think the US is going to have to, do the running, if you like, to get some sort of a détente in place before the end of the month.
Well, in the case of the yen, obviously, as well, political factors heavily at play here. Did that news from Japan in terms of the breakup of the coalition catch you at all off guard? And do you think FX markets more broadly are still unpacking this?
Well, I think so. I think the election of Sanae Takaishi last weekend caught people very much off guard, given that all the speculation in the lead up to there was that she wasn't going to be victorious because of the depth of LDP party member support for Koizumi. So the markets were still coming to grips with that, but I think the working assumption was that she would be able to form a working coalition with the partner Komeiti that they've been in power with since 1999. So Komeiti's withdrawal basically from that pact, I think, was a big shock. And if you look at the way that the Nikkei futures market behaved on Friday, we ended up with a 5% decline from start to finish, which was appreciably more than we saw from the Nasdaq, for example, which was the next worst impact. So we've clearly got some questioning of the so-called Takaishi-nomics, should I call it, basically. But obviously that uncertainty certainly plays in the direction of BOJ inertia, which was obviously the way that markets were travelling before Friday. So, that obviously plays to the yen negative side of the equation. But what we also saw amply demonstrated on Friday was that in risk-off markets now, it's the yen followed by the Swiss franc that are enjoying the benefits of safe haven flows. And interesting that the US dollar was weaker overall, even with those relatively violent moves in stock markets. So for the time being, whatever we think of the US dollar, safe haven status status isn't one of those characteristics.
Yeah, so there's sort of arguments in favour of either direction, strengthening on the haven play, weakening on BOJ inertia. But what does that leave then for the Japanese currency? Range-bound, perhaps?
But, well, I mean, it was certainly, based on the view that we were going to have to revise our thinking about the rate and the speed or the timing of BOJ policy normalisation, which was one of the key tenets of forecasts that we've had for an appreciably weaker dollar-yen between now and the end of the year and travelling through next year. That's still, that force is still present there. But if, we're very much dependent now on the so-called taco trade, if you like, having the veracity that says that the world is going to be in a much better risk place by the end of the month than it is at the moment. Because if that's not the case, then it could be the case that, in terms of forecasts for a lower dollar-yen rate, we're simply having to switch horses and move from the Bank of Japan policy outlook to saying that the yen is demonstrating its characteristics as the preeminent safe haven trade. So I think those competing influences are going to be at play for a little while yet. And as I say, to answer your question, I think yes, it probably does play to a little bit of inertia, at least for the next sort of week or two.
What do you make then of the yen versus other currencies? Because we've also been tracking, for instance, the euro-yen dynamic quite closely.
No, absolutely. And down here, obviously, we've been very locked on to Aussie yen, which had actually spent time back above that 100 level, which is psychologically was a really important level. And we went from 101 to 98 on Friday. So, again, just when I think we were all getting a little bit comfortable with the idea that revised Japan interest rate outlook played to, Aussie yen strength, and potentially, yen weakness relative to the likes of the euro, which, had been in some sort of a reversal. So, again, I think it leaves us very much sort of in limbo at the moment. I think one of the problems is that, the markets bought the rumour as far as the euro is concerned earlier in the year in terms of, what structural reforms and what significant expansion of fiscal policies, particularly in Germany, but in other countries, directed at infrastructure and defence. Obviously, to date, those reforms have been noticeable by their absence. And I think that's left the market with a pretty jaundiced view of wanting to continue to pile into long euro bets. So I think that is a completely separate sort of issue that's going to keep the euro very much on the back foot at the moment. So I think as far as yen and yen crosses are concerned, markets will probably look elsewhere for direction.
What's the threshold for intervention for the yen? And the age-old question, is there any point?
Mm-hmm. Is there any point? Well, I think you've answered the question in the affirmative or the negative, in the sense that I think at this stage, if it is the case that we're going to see, let's assuming that we get through this sort of current risk-off episode, and we do see the Bank of Japan potentially being, parked on hold for longer than we otherwise anticipated, then, I certainly think it's going to play, to further yen weakness in terms of levels. I mean, the levels where the Bank of Japan intervened or the MOF ordered the Bank of Japan in a couple of years ago was around a 160. So between now and then, I think the prospects of intervention are pretty limited. But, to your point, I think, while that fundamental backdrop is not conducive to yen appreciation, then I think it gives speculators and particularly retail investors an opportunity to reload on the short side of the yen.
All right. Ray Attrill, Global Head of FX Strategy at National Australia Bank. Thanks as always for joining us. And we do have more ahead on the Age of Trade. Stay with us. This is Bloomberg. Let's get the latest now from the corporate front. First Brands says its CEO, Patrick James, is considering stepping down as scrutiny grows over the auto parts maker's sudden collapse. A source says his brother Ed has already left a senior role. The Justice Department is examining how Wall Street lenders missed red flags before First Brands filed for bankruptcy, owing more than $10 billion. Bloomberg sources say Warner Brothers Discovery has rejected Paramount Skydance's initial takeover offer for being too low. Told Warner's rejected Paramount's offer of about $20 per share in recent weeks. Warner CEO David Zaslav has said to believe the company's streaming and studios arm will command a premium next year once split from its cable assets. Now, Qantas shares fell in Sydney after it confirmed data stolen in a July cyber attack has surfaced online. Almost 6 million records were exposed via a third-party platform, mostly names, emails and frequent flyer details. The airline says no credit card or passport data was accessed. Australia's government says it will never negotiate with cyber criminals or pay ransoms. Right, so let's take a look at how markets are tracking ahead of what promises to be a pretty interesting day. Here in Australia, we're off by about 2/3% at the moment. I'll check some of the movers there shortly. Markets are going to be closed in Japan today, which is interesting timing because not only is Japan exposed to the trade story, there's political turmoil as well, with the 26-year coalition between the ruling LDP and its coalition partner Komeito fracturing over the weekend. Now, a question mark over whether Sanae Takaichi can even become Prime Minister, so a very uncertain political backdrop in Japan. That notwithstanding, futures better by 1.3%. We're seeing a bit of optimism for S&P futures as well, up by more than 1% at the moment. The reason for this is despite the tense trade backdrop, we have heard some conciliatory remarks from both Vice President J.D. Vance and President Trump. President Trump lavishing praise on Xi Jinping, telling pretty much everybody to relax. November 1, the deadline for new tariffs, he describes as an eternity for him, and the trade situation with China will be worked out. Now, I mentioned we'd take a look at some of the movers here in Australia. No surprises here. We've got gold miners performing very, very strongly. Gold close to a record again. Once you price it in Aussie dollars as well, it's very impressive, about 6,200 Australian an ounce. So no surprise to see Evolution and Northern Star among the top performers there. Lynas Rare Earths also better by more than 5%, not only due to the tension between US and China over rare earths, but also news reports over the weekend that the Australian government is considering a $780 million minerals reserve investment as part of a deal with the US. Bell.
Yeah, Paul, also taking a look at what's happening in the tech space this morning, because we're going to be watching Samsung, SK Hynix very closely. That's the last trade there. But on Friday, you saw President Trump looking to expand export controls to critical software. We're also just really questioning if this AI enthusiasm perhaps is becoming a bubble. So something else that certainly plays into the dynamics as well. But let's also take a look at the crypto space, because we saw a huge sell-off, billions being liquidated in positions on Friday. We have seen a slight recovery of crypto prices through the weekend, but certainly Korea is a very big market for retail trading as well for crypto, so those could be some of the stocks to see some downward pressure as well. You can see Bitcoin hovering around that 115,000 mark. We'll have more ahead with the open in Seoul next. This is Bloomberg. This is the Asia trade. We're counting down to Asia's major market opens this morning. Well, South Korea is, of course, about to come online. Japan is shut today, but China is also going to be the major market to track when it starts in the next hour, Paul. I mean, it's really fireworks for the session today. We're expecting quite a bit of downward pressure, even as you saw that sort of trade detente maybe shattered on Friday, and it seems to have been maybe softened a little bit, the rhetoric over the weekend as well.
Yeah, absolutely. And what a day for Japan to be closed as well. Not only not able to react to all the developments on the trade front, but also the shock fracturing of that 26-year-old coalition agreement between the ruling LDP and its partner Komeito, really making the future uncertain for Sanae Takaichi and even whether she can become Japan's first female prime minister. So markets won't have a chance to react to that, though.
Yeah, that's right. But what we are watching in the session today is how much that risk is sort of being priced in. So you're seeing gold, for instance, continuing to rally here a little bit above that 4,000 mark. But Paul, I mean, we're watching US futures, Bitcoin as well.
Yeah, let's take a look at how futures are tracking. We've seen a slight improvement there, well, a dramatic improvement actually, better by 1.1% now. This is after we heard some somewhat soothing words from President Trump regards the trade tensions with China. He's saying that, praising President Xi, saying everybody should relax, something will be worked out, and the November 1 deadline for those 100% tariffs, the President describing that as an eternity for him. So the taco trade, as it's become known, gaining a little bit of momentum there. The gold price not really completely convinced, though. We're seeing gold continuing to rise, just hovering below that record now, $4,035 per ounce. Bitcoin, though, got hit pretty hard over the weekend, but now recovering somewhat, 114,000, just below 115, Bell.
Yeah, we'll watch crypto quite closely, especially with a lot of crypto-linked names in Korea in the session. But we do have the Kospi just coming online today and watching Samsung, SK Hynix in particular here, because you can see both of those slumping. It's not just the question marks over what export restrictions look like. We saw on Friday Trump very much focused on software, but it's also the AI trade and whether we're continuing to see that bubble. It's a pivotal time for the US earnings season to be kicking off, because that narrative or that thesis is very much going to be tested. The Kospi here down by 2% at the start of trade, and we're also keeping an eye on earnings as well, because we just saw LG Energy third quarter operating profit beating estimates for the session today. What else we are watching is the trade figures, because we just got export figures coming in for the first 10 days of October. We have seen those pulling back more than 15% on the year. So again, something else that plays into dynamics, because Korea really seen as a barometer for that market. Nikkei futures, just let's take a look at what's happening with those this morning, because we do see the Singapore contract continuing to show declines essentially on a 2-day basis. Also, when you take a look at contracts that are trading in Japan, you do see, again, further losses perhaps being expected. But it is really a very uncertain political future ahead for Sanae Takaichi of the LDP. But let's get more on the market outlook and bring in Port Shelter Investment Management CEO Richard Harris, who says markets are essentially debating how serious Presidents Trump and Xi are about their trade threat. So it's really that taco trade. How much do we need to price that in, do you think?
Well, I think both sides have been doing an enormous amount of posturing. Of course, the US has been slightly increasing its trade terms with China over the time. China's come in with the rare earth issue, which looks to me to be a complete negotiating ploy. You know, you tighten things up and then you relax them during negotiations and everyone's a winner. And then Trump, I think, has maybe reacted a little bit more than China thought. But clearly, we're all aware of the taco trade, and over the weekend things seem to ease down a little bit. So I think there's a pretty strong chance that when they do come to negotiations, before November 1st, they will have some sort of agreement between the two. Now, of course, trade deals aren't done in 5 minutes. They often take 2 or 3 years to do. The amount of detail is enormous. But I think, once again, they will come to some sort of agreement that won't be too bad for everybody, and they'll carry on. But that may not happen. Maybe a 25% chance that may not happen.
Yeah, it's really, I guess, you just want to get that headline sentiment, and we're still kind of trying to understand that, whether there's going to be any sort of detente. I mean, you do see, I guess, some reversal being priced in, but then we were just reflecting there on gold prices, for instance, and you're continuing to see those slightly bid today, so it's still very fragile. What happens then in the near term, and how important does earnings become as well, the earnings season with the US kicking off?
Well, I think on gold, first of all, that's moving because people really aren't too sure about the future of fiat money. You've got debt issues there, and you've got issues with what currency are people going to go in? Are they going to go in the dollar? No, it's coming off, but do you want to go into euros? Do you want to go into Swiss francs? There's the uncertainty there. Going back more to the micro level, to earnings, of course, I mean, earnings have held up not badly. We've been forecasting falling earnings now for quarter after quarter after quarter. They haven't really happened. The market's kept itself up. The early earnings tend to be from the banks, which will probably still be okay. But I think investors will be looking really carefully at how earnings do in the other parts of the market. What's happening to the smaller company? What's happening to US importers? These kind of things. So earnings is a really big indicator, just as unemployment Employment is a big indicator for which we don't have any numbers.
Few difficulties.
Richard, I'm just wondering what you might anticipate at the Open in China today, because the index tracking large cap Chinese stocks in the US took a bit of a beating late Friday. We have a chart here on the Bloomberg that illustrates that. However, since then, we've heard some conciliatory language, as we were describing, from President Trump. So what do you think the reaction's going to be when we get the Open later?
Well, I wouldn't be surprised if the market's down a little bit. Maybe we'll see some sort of recovery. Clearly, the markets are going to be concerned about this sort of on-off kind of negotiation for a while. So it'll probably hold things back. And let's not forget, in April, we had some very, very sharp moves downwards on this whole tariff talk. I think markets generally are really pretty fragile. They've moved up almost too far, too fast. They moved up on the AI bubble. Valuations are high. They are fragile to some kind of external shock. Now, we've seen First Brands and one or two other companies go bust. The irony at the moment is we're talking about a Paramount Time Warner link-up. And don't forget, in 2000, we had a link-up between AOL and Time Warner. Sorry, it's Time Warner in 2000. It's just Warner now. So, you know, you get to the stage where you start seeing some really irrational things in the market, some irrational M&A deals in high valuations. So it only needs a small shock to get things going. Is this Trump-Xi element a shock? I don't think so. I think maybe 75-25% probability that this is all going to blow over by November 1st. But we're still in an environment where people have to keep an eye out for that unknown that's maybe going to shake the market out of its optimism.
So when markets are, as you describe, fragile and pockets of things are looking overvalued, when you see a pullback like this, what do you think? Buying opportunity or omen?
Well, let's face it, we're sort of down 2 or 3% from the top. And generally, markets don't crash instantly unless there's a major shock that people really don't know about. They tend to come off for a little while, and then there's maybe a shock which pushes the market down. And you see this quite consistent. So I don't think that investors really are in a position to sell, then buy just at the moment. You know, if we're talking 2 or 3%, what's the point? If you feel it's going to be 20-25%, then maybe you've got some hope there. But the chance of being whiplashed at this stage of the market is still quite high, because very often markets will have a false rally in the middle of a bull market and everybody gets caught. So, no, it's too... oddly enough, it's too... the volatility is too low, really, to trade at the moment. You can only really make money if you're looking at some big moves.
And how do you want to position then in that sort of environment? What's your posture looking like?
Well, I've been over the year, I've been switching out of very heavy overweight in the US, where everybody was, mainly through performance, taking those profits out and putting some into China, been putting some into specific sectors like defense, oddly enough, pharmaceuticals, which haven't done too well. But let's face it, when markets fall sharply, the farmers won't fall quite as much. So it's really a case of being more defensive and also raising some cash, because I think cash is likely to be your friend further on. The big question is, where do you keep the cash? You don't want to keep it in bonds. You don't necessarily want to have it all in dollars, so really you need to have a diversification. I always used to think that, you know, you've got a third in 3 major currencies. That way you can only be 2/3 wrong. Or is it 1/3 wrong? One of the two, anyway.
Okay.
All right.
Thanks, sir.
Mostly right. Port Shelter Investment Management CEO Richard Harris there. Thanks, as always. As we mentioned, the Trump administration signalling openness to deal with China. Speaking aboard Air Force One a short time ago, President Trump called Chinese President Xi Jinping a smart man and a great leader. Let's bring in China correspondent Min Min Lo now. So, Min Min, what might we anticipate today in terms of China's response?
Well, already China has responded over the weekend, but we'll see what else they say. But so far, China has said that the U.S. threatening China with tariffs at every turn, that is not the right way to deal with China, and China will not hesitate to retaliate to protect their legitimate rights and interests. And so far, China has already opened up, an antitrust investigation into the U.S. chips company Qualcomm. There are the rare earths export controls that were tightened the past week that led to the spiraling of this trade conflict. But look, it all started, when the Chinese view here, from what I've been hearing from analysts, is because they view the U.S. as acting in bad faith after the agreement that was reached by both sides after the Madrid talks, because there was an implicit understanding at the time that both sides would refrain from any unilateral measures ahead of this potential summit between President Trump and Xi. That was clearly stated during Xi's call to President Trump, where he said any unilateral measures would undo the multiple rounds of trade talk results so far. And what happens after that call? 10 days later, the U.S. expanded the rules of the U.S. entity list, and that kicked off this whole spiral that took place over the weekend. So we have seen, for example, Hu Xijin, a Chinese state media commentator, the former editor-in-chief of Global Times, he says that this could mark a turning point in U.S.-China relations, especially if China sees the U.S. as acting in bad faith with its credibility at stake. Then they may not be willing to negotiate further, and we could see a very escalatory spiral of this tit-for-tat retaliation, potentially China also matching some of the latest tariffs from President Trump as well. But we still have some time, because November 1st is when those tariffs kick in, so that gives us a couple of weeks for the both sides to dial things down from the edge.
So Min, we were just speaking with Richard Harris there from Port Shoulder Investment Management about the China markets reopening today. What are you going to be watching?
I mean, there are a lot of speculation about what's going to happen. Obviously, undoubtedly, we're going to see a sell-off today. Judging from what happened overnight, we're seeing upwards of 6% sell-off in the U.S. ETFs, in the China ETFs that are traded in the U.S. And if you look at the iShares, it smashed through the 50-day moving average last Friday and just holding on to the support level of the 100-day moving average. We are likely to see a sell-off today. The question is whether it's going to be a knee-jerk reaction with some sort of cautious rebound later on. Some analysts believe that could be the case. JP Morgan saying if there is an outsized sell-off today, it is a window to buy, because they expect that both US and China would work towards another trade truce before 2026. Other analysts are saying that this is an all-in moment, posturing ahead of that Xi-Trump summit, which means that this could be the bottom of everything, and everything else would point upwards from here on out. So we'll have to see what happens. There are two very powerful men who can really move markets with just a few words, and we really have to see how the negotiations play out.
That was Bloomberg's China correspondent Min Lo there for us in Shanghai, and taking a look as well at some of the movers, because we are just about under 15 minutes into the session so far for Seoul today, and you can see here crypto-linked stocks are declining. We did see some very volatile action in crypto, with a lot of positions being liquidated starting Friday. We have seen prices somewhat recovering over the weekend, but trading around $115,000 per token for Bitcoin. We'll have more ahead on the Asia trade. This is Bloomberg. Well, we have political uncertainty and instability in two key countries, Japan and France. But taking a look at Euro futures this morning coming online, because we have been really tracking what's happening over in France. Sébastien Lecornu returning as France's Prime Minister on Friday. He had abruptly ended his term on Monday when he resigned just hours after his cabinet was announced. But he did return as Prime Minister on Friday, now racing to form a government, betting on policy concessions, and certainly lawmakers fear as well as snap elections as he prepares to file a budget. So we are just looking there. You can see here Euro stocks futures just fractionally in the green so far. But Another political drama we're following is the collapse of Japan's decades-old ruling coalition. Talks between the Liberal Democratic Party and junior partner Komeito fell apart on Friday, casting doubt on Sanae Takaichi's chances of becoming Japan's first female premier. Our economy and government reporter Erika Yokoyama joins us now. So, Erika, just walk us through this latest situation regarding the LDP and the Komeito coalition and exactly how the market is perceiving this as well.
Sure. So there was a little bit surprise movement on Friday. Japan, as you said, Komeito decided to leave from the coalition and saying that they are not satisfied with the LDP's response to political fund scandal. This marks the first breakup in 26 years of their long-standing partnership. And of course, the LDP's newly elected leader, Takaichi, now faces the uncertainty over whether she can become a prime minister, creating a major political instability here. And amid the series of developments, market volatility has increased sharply. The yen had been weakening since the Takaichi's surprise victory in the LDP leadership race. But there are some rewind after the Komeito announced its departure. And also the uncertainty has also stalled the momentum in Japan's stock market as well. And there is also now growing speculation that opposition party could unite behind a single candidate, possibly Democratic Party of the People Chief Tamaki. In any case, who becomes the new prime minister, that person needs to cooperate closely with opposition parties, keeping fiscal concerns lingering and adding upward pressures on the bond yields as well. So I think all currency, bonds and stock market continue to see the volatility towards the premier election this week.
Yes, so what's the implication here against this backdrop of political turmoil for the Bank of Japan and its tightening journey?
Indeed. I actually think there is a mixed implication with two opposing impacts. So as I've just mentioned, the yen is weakening, so which could push the BOJ towards the near-term rate hike to counter the import-driven inflation. But on the other hand, I think the political instability will likely make the BOJ more cautious about moving soon as well. Takaichi, known for pro-stimulus stance, said before the LDP race that she prefers to maintain the current rates for now in one of the candidate surveys. So the BOJ may probably wait for political clarity and the new leadership stance before making any major decision. Actually, market is now more betting on the wait-and-see approach. The overnight swap index shows only 20% now sees a chance of rate hike in October, down from roughly 70% a few weeks ago. And, we still have a chance to hear from the BOJ board members before the October meeting, including Governor Ueda, likely to speak during the IMF and World Bank annual meetings to be held in Washington, D.C. this week. So markets should be closely watch any sign from him.
All right, economy and government reporter Erika Yokoyama there. Well, President Trump has repeated that the war in Gaza is over and he expects the truce to hold as he travels to Israel to seal the biggest diplomatic achievement of his second term. Trump will speak to Israel's parliament, the Knesset, later on Monday.
The war is over, okay? Do you understand that? I think people are a lot of reasons why it's going to hold. But I think people are tired of it. It's been centuries, okay? Not just recent, it's been centuries. I think people are tired of it. Yeah, the ceasefire is going to hold.
Bloomberg's Michael Heath is following developments for us, so it's going to be a quick trip around the Middle East for President Trump. What's on the agenda?
Yeah, Paul, a whistle-stop tour sort of thing, but as you mentioned, he flies in and then he's going to address the Knesset. Presumably that happens in fairly close coordination with the release of the 20 living hostages. And then from Israel, he's going to Egypt, to Sharm el-Sheikh, the resort town, where there's a gathering of various countries that have been involved in the process, as well as European nations. Presumably it's a peace signing deal. They're calling it a peace conference, so I expect that would be part of it. And and perhaps they start to talk about the stabilisation force that's due to come in and take control in terms of security in Gaza. Not sure whether that's happening, but that would obviously be a fairly high priority on the agenda, because that's sort of one of the next steps that needs to go on.
Yeah, just talk us through the next steps. There's still quite a lot of different areas that need to be ironed out, but what's most pressing?
Yeah, Annabelle. Well, obviously, you have the release of the hostages, and Hamas is also supposed to release the bodies of it's understood to be about 28 hostages. The problem is they don't know where all of these bodies are too. So even Israel's intelligence agencies are saying their understanding is that Hamas doesn't actually know that either. So that may be delayed a bit. Then on the Israeli side, obviously they're withdrawing their forces, and the hostilities have basically ceased, but they're then due to release almost 2,000 Palestinian prisoners, 250 of them being life sentence people who've been sentenced to life. So the names of those people who are released are going to be quite interesting as well, because some of the ones that Hamas has wanted to get out have been involved in some pretty horrific crimes. So that'll be interesting to watch too. So that's where we're fairly confident that'll all go ahead. The question then is about disarmament of Hamas. I mean, the reports are that Hamas is already on the street with armed men there. So they're supposed to be disarmed. A stabilisation force is supposed to come in. The US is already sending in 200 soldiers to be part of that. And so presumably there's going to be Arab states that contribute there as well. And then, how far Israel pulls back within Gaza or to the borders of Gaza. And also there's supposed to be a Palestinian technocratic administration that is meant to exclude Hamas. But at this stage it's not looking like that'll be the case. And then you've got this oversight committee that Tony Blair and President Trump are supposed to be in charge of. So there's a lot to get through, and there's a lot of fudging that's been going on in getting those sort of agreements going. So there's a lot of work to be done. So this is sort of a whistle-stop tour, but the hard work is probably yet to come.
Yeah, definitely. And we heard President Trump in those remarks earlier saying this has been going on for centuries. And it really depends on how you measure this conflict. But all the drivers that were there before October 7 are still there. So how lasting can this agreement be? Yeah, well, look, I think, you've made this point before as well, and he did then, is that there's a degree of exhaustion, obviously, on both parts. I mean, this is the longest war Israel's basically fought. The people in Gaza have been under, relentless bombardment and attack as well. So there is a degree of exhaustion which probably suggests that we're in for a period of quiet and peace, particularly if reconstruction can get going. But yeah, look, on both sides, whether it's Israel sort of moving more to the right and with Hamas in charge and whoever comes after them if they do leave, there's just a degree of radicalisation on both sides, and you need them pushing towards the centre to have any hope of a lasting peace, and there's just no signs of that. So, you hope for the best, but the portents aren't great there. All right, Bloomberg's Michael Heath there. We have more ahead on the Age of Trade. Stay with us. This is Bloomberg. Let's take a look at how some key commodities are tracking at the moment. We're seeing a recovery in prices following some encouraging news that President Trump looking to settle down this trade dispute with China. Oil rallying. We've got copper prices higher as well, but gold perhaps not completely buying the story because it's up too, hovering just below a record 4,038 an ounce at the moment. And in terms of precious metals, take a look at the silver price as well. Now closing in on an all-time record. That record is $52.50 for an ounce, set way back in 1980 on a now defunct contract for the Chicago Board of Exchange. We've even got word of some traders booking slots and cargo holds to London for silver bars. Pretty expensive way to transport that metal. More ahead on the Age of Trade. This is Bloomberg. Let's take a look at risk assets, very much in focus as trade tensions escalated and then appeared to dial back again between the US and China. President Trump signalling openness to a deal with China, saying November 1, the deadline for those 100% tariffs, is an eternity away. Also praising the leadership of President Xi. So we're seeing a modest rally in risk assets there. S&P futures up by more than 1%. They've been hovering around that level for most of the morning. Take a look at the yuan on the end of that board there. We will be closely watching, of course, the fix today to see how Chinese policy makers react to this latest round of tension. Well, let's get to our next guest now, Wendy Cutler, Vice President at the Asia Society Policy Institute. She's also a former acting Deputy US Trade Representative. Wendy, thanks so much for joining us. In terms of what we're seeing here, we do have something of a roadmap. We've been here before, back in April with Liberation Day, and already we've got President Trump and Vice President Vance making a conciliatory sound. So where do you see this latest dispute heading?
Yeah, so I feel like we're on a roller coaster again, where tensions were very high just about 24 hours ago. But now it seems that both sides want to de-escalate. Conciliatory words from Trump today in his Truth Social post, along with comments from the vice president. But China also, even after it explained why it took the measures that it has, it also seemed to be urging both sides to get back to the table. So tensions high, but some de-escalation, and we'll have to see how China responds today.
In terms of China's response, I mean, to what degree do you feel China's holding a better hand now than it was during its earlier trade dispute with China back in President Trump's first term?
Look, I think Washington is dealing with a much more assertive Beijing. China is prepared this time around. It has put tools in place to respond to U.S. measures. It has reduced its dependence on U.S. imports and has reduced dependence on its exports to the United States by forging relations with other countries, particularly increasing its trade flows with Southeast Asia. And it's increased its self-sufficiency, as well as it's identified its choke points where it can hurt the United States in the area of critical minerals and magnets and soybeans. So this is a new China we're dealing with, and I think this is coming as a bit of a surprise to Washington, not used to seeing such quick and assertive responses from China to every measure that Washington is taking.
Do you think, though, that Beijing may have overplayed its hand slightly in recent days?
Absolutely. And I think that was evident by China's response yesterday. 2 days ago, it announced sweeping extraterritorial measures with respect to critical minerals and magnets, which, if implemented fully, could mean that basically almost every transaction would need some kind of Chinese export license if it used just the smallest amount of critical minerals from China. It seems to have walked back from that a bit. Again, it seems like it wants to get back to the table with the United States and de-escalate. But again, that's easier said than done when tensions are high, misunderstandings are great, and trust is low.
Where does that leave us then for the supposed meeting between President Xi and Trump in a few weeks' time from now? Do we still see it happening, or what's the tone that's going to be struck if it does take place?
Well, if you asked me 24 hours ago, I would have been a lot more negative. But it seems now that the president has said he's going to Korea. And I think the odds for holding this meeting are strong. But I think that more communication needs to happen before that meeting between Secretary Bessent and Vice Premier He to make sure that things are on track for this meeting.
How long does it take to work these things out? Because traditionally trade deals can take years to settle, and even in the first Trump administration, we only got to phase one. So do you see any meaningful agreement being reached for the duration of President Trump's term?
Not during this meeting, for sure. I think they're going to have to focus on de-escalating the critical issues at hand right now. In addition, just to mention, on Tuesday, the United States is going to be putting very steep fees on Chinese ships making port calls in the United States, and China has pledged to respond in kind. So that's going to be very important to watch to see if those measures go into place. And again, if they do, then any meeting between the two leaders is going to have to talk more about how to delay or unwind these measures versus, embarking on other areas in the relationship.
So Wendy, on that note, though, what do you think we see around the sort of actions we've seen so far? The US sort of continuing to flip-flop on its assessment of China, or its tone toward China, China continuing to try and assert its dominance on the global stage, deepen those relationships with other key trading partners. Does that sort of dynamic continue, that sort of divergence, I guess, that we see?
Absolutely. I think both sides clearly understand that they need to diversify and reduce their dependence on each other, particularly with respect to strategic goods. So that is going to continue regardless of any meeting or mini trade deal or substantive trade deal between the two sides. That said, I think it's in both sides' interest to continue a tariff truce and not to raise tariffs more, or for China now to get in the export control game. I think those are very dangerous paths forward.
Wendy, thanks very much for joining us. Really great insights this morning. That was Wendy Cutler there, Vice President at the Asia Society Policy Institute and former acting Deputy U.S. Trade Representative. Just some breaking lines that have crossed the terminal in the last few minutes relating to China Vanke. This is the embattled Chinese property developer. We have got an update on leadership of the firm as well, because we have the chairman, Xin Jie, resigning effective of 12th October 2025. So yesterday, Sunday, he has only been in the chairman role amid an abrupt management overhaul in January of this year, so just several months into the position. But we did get a filing, and essentially in it says that he has resigned, Mr. Xin, as chairman of the company effective from Sunday, so yesterday. He is someone who no longer will hold any position in the company after that date. So we'll get more details on those or that as it comes to hand. You are just taking a look at China Vanke shares trading off year to date. More ahead on the Asia trade. This is Bloomberg. We're taking a look at crypto this morning. Bitcoin prices are really quite far off the levels that they were just a few sessions ago. We saw a massive liquidation on Friday in the session, a record $19 billion in bets evaporating, crypto prices tumbling across the board, being sort of sparked by the tensions, the trade tensions between the US and China. Lots of question marks, the biggest one-day sell-off, but who exactly was left to getting wiped out? But let's get more on the outlook as well and bring in Yat Siu. He's co-founder and executive chairman at Animoca Brands, joining us from New York. So Yat, thanks very much for your time this evening. Talk us through exactly why we saw this trading activity, and as well why we've seen sort of prices looking to stabilize a little bit over the weekend.
Yeah, I mean, I think what happened over the weekend was a little bit of a shock, as mentioned earlier. This is the biggest sell-off, the biggest liquidation in the history of crypto. I think the slightly positive thing to take on is that actually, when you look at the majors like Bitcoin, Ethereum, Solana, and so on, actually it's held relatively well given everything else. And we've seen a recovery really over the last 24 hours. It's been quite strong. Ethereum went back over $4,000, for instance, whereas it had gone down to I think 3,300, 3,400 for sort of a bit of a moment. But I think there's some some interesting thing here to look at, which isn't only specifically around just what happened with the tariffs and a bit of that, but also that there's been a dislocation in the pricing that you see between centralized exchanges and actually the DEXs like hyperliquid. So what we see here, for instance, while there's been a lot of opposed liquidations, the prices have collapsed, momentarily, in some cases going down to sort of like literally sort of 70 or 80% drops, but for a moment. And of course, that forced liquidations across the board. And a lot of people, even who thought they were relatively safe with their sort of, positions, basically got auto-liquidated. And so the auto liquidations is actually what forced this. And it also happened overnight for most people. So they didn't even realize what happened. And then when they woke up, they're like, oh, my goodness, they've lost a lot of their positions. So that's the tragic part. But I think the other part of the story is that there's a question mark around where all that liquidity dislocation was, because market makers might not have been in place. For instance, there's been some inefficiencies in some of the exchanges. You even had some exchanges commenting around them possibly reimbursing users based on certain things that they've discovered. It's not clear. There's also the concern that some people have, which is that, okay, when there's such a large amount of liquidations, there might be certain trading firms or other companies that could be in trouble, a little bit like sort of, let's call it, Terra Luna vibes, right? When Terra Luna happened, actually, Terra Luna itself didn't create sort of the big shock. It was bad, but it was what happened after, because then a lot of positions essentially got hurt, and then, weeks after or a month after, stuff happened there. But you can see, for instance, when you think about the activity in decentralized exchanges like DEXs, you can see everything happening very transparently. And so in that sense, you could see clarity around what's happening. So, on Hyperliquid, you had something like $9 billion basically liquidated. And now basically open interest is reduced down from, I think, a peak of like 14 to like 1.5 billion. And you can see that. And a lot more people are looking at that as a more trusting venue of trading, because they can see all the numbers transparently. Whereas in centralized exchanges, it's been harder to know. And the prices have been dropping much more precipitously at the centralized exchanges as well. So there's a lot of question marks around that. However, if you look at the bounce back today, it's been very positive. And if you look at the majors again, Bitcoin, about 115. We should look at the zoom out perspective. 6 months ago, actually, all of these sort of crypto prices were significantly lower. And so I think we can see generally sort of a positive momentum. I see it as sort of strength and resilience building up over time. But certainly, it is, the weekend was very concerning.
So what does it tell you then about the market maturity, the trading action, and the fact that you saw some dislocations?
Well, I think it's definitely one where a lot more sort of development needs to happen. And I think the area that is, I think, encouraging is that decentralized exchanges, which are actually the open venue with a lot more sort of transparency, are turning out to perhaps in many cases be the more resilient part, and perhaps also the one that we should be looking at and where we should be trading a lot more, because we can see everything openly and transparently in a way, right? So I think there's a little bit of that. I think with decentralized exchanges, the difference is that there's so many of them as well. And so they trade at different prices around, and really the liquidity is often sort of managed by, the market makers across the space. And the problem is that you might have price dislocations across different territories, different areas. And when you have sort of, for instance, APIs or sort of, I guess, liquidity not being able to move, like during this sort of heavy load, a lot of the sort of, balances weren't able to be transferred from one exchange to the other, for instance, because there was delays. And in moments like these, delays, even of a few seconds can be deadly, right? Which is the difference. Whereas in the DEX, it's transparently sort of traded there. And I think we can sort of see where the future is. Like, this to us indicates more clearly that the future in crypto is much more decentralized over time, which when you think about the majors like Bitcoin and Ethereum and Solana, it is very much operating in a decentralized manner. And I think eventually we'll see a lot more trading activity moving towards that as well, which will give people more confidence as well.
Just curious, do you think we've got the floor in for Bitcoin today? What's the next move?
Well, I mean, I think when you think about sort of the institutional demand, one of the things that's interesting is that people aren't saying, oh, my goodness, I should get out of Bitcoin. Basically, people are saying that this is a buying opportunity as we see it. What I also think is interesting is that the recovery of the altcoins was very marked. So while Bitcoin sort of staged a little bit of recovery, relatively speaking, for where it was, I mean, over the weekend, it hit 103,000, I think. So, and again, when you look at it from a few years ago, of course, significantly up. But when you look at, for instance, the recovery of Ethereum and all the other altcoins, we're seeing literally literally sort of 8%, 10%, in some cases 20% gains on some of the sort of majors or like majorly listed sort of tokens. So basically you can see that recovery happening very, very quickly. So I think it's a general sort of positive sign. Bitcoin to us is like digital gold. It's sort of the safe index and the laggard as well. So it's not necessarily going to accelerate as quickly, but it's an indicator of the whole space, right? And now I think 6%, 7% up for sort of the macro of the market right now for crypto. Close to touching 4 trillion again. So again, it's been a very, very fast and swift recovery. And I think, in traditional markets, you have things like on a weekend, you can't trade, for instance, or you have 10 to 5 trading hours or 10 to 4 or whatever, right? So there's sort of natural breaking limits, whereas in crypto, it's 24/7. So the momentum and the durations are something that I think a lot of people aren't used to, but in crypto it happens very frequently because you can see it literally 24/7. And imagine what the stock market would look like if you could actually trade 24/7. It probably would be having similar sort of swings because markets react basically to news very, very quickly, which you see much more pronounced in crypto than you would see in other areas, precisely because of the fact that you can't trade regular sort of shares in the same sort of speed as you could with crypto.
Has the market activity affected your thinking around a planned IPO? And given the tensions as well between the US and China, would you still be looking to stick with the US as a possible venue, or would you be looking to shift back to Hong Kong, for instance?
Well, just to clarify, we never actually publicly stated whether it was going to be US, Hong Kong, or anywhere else. However, that said, we have made it very clear that Animoca is looking to eventually become a publicly listed company. The reality is, of course, that America is aiming to become the crypto capital of the world, if not already. So it would be sensible of us to look at it very seriously. In any regard, a listing plan for Animoca does not necessarily determined based on purely sort of market gyrations in crypto, because it's based on sort of, I guess, more fundamentals. We are a company that is operating, quite profitably. And for us, it doesn't really matter so much in terms of the sentiment per se. Of course, it's the right timing, but it really matters that we get institutional interest in the company. And part of it also is letting people know that, there's companies like us that actually are not an exchange, but actually operating in crypto in a very significant and profitable way. So it's part of telling the story. But yes, I think all markets are open, but of course the major ones like US and Hong Kong are obviously clearly of high interest for us.
All right, Yat Siu, co-founder and executive chairman at Animoca Brands. Thanks so much for joining us today. Now let's take a look at some of the movers in the region at the moment, how benchmarks are tracking at the moment. Weakness across the board against this backdrop of trade tensions, and we've just heard from Citi as well, analysis suggesting that renewed trade tensions between the US and China could cause volatility in major China-related indexes this month. That's according to Citigroup analysts, and that's certainly what we're seeing. We're off by 0.5% here in Australia. That has been, eased to some degree from a very strong performance from gold miners and rare earths miners as well, which are both having an excellent day. The Kospi, however, off by 1.25%, and we're seeing some weakness in some of those big names. Samsung Electronics, SK Hynix, Samsung among the biggest contributors to that loss. We have more ahead on the Asia Trade. This is Bloomberg.
You're watching the Asia Trade and taking a look at how futures are setting up for the opens in Hong Kong and also mainland China. You can see here expecting sharp losses across the board. The question is how long, though, if we do see that sort of trading activity, will it be sustained? We've got some views coming out from Citi, for instance, saying that, again, stock market volatility is likely. But we've also heard from Pantheon's chief or senior China economist, Kelvin Lam, who's saying that you will see that initial drop, but they should start to pare the losses as well. Still on China, because the NBA has returned to China with pre-season games in Macau. That's 6 years after fallout over the protests in Hong Kong put the relationship on ice. Our Chief North Asia correspondent Stephen Engels sent this report.
Six-time NBA All-Star and Hall of Famer Mitch Richmond is part of the NBA's, dare I say, full-court press to win back fans in China after a 6-year freeze of its annual China Games. You could say the relationship has been hit and miss. The league had been playing preseason games on the mainland since 2004, building a massive and lucrative fan base. That came to a screeching halt in 2019 after one team executive posted on social media support for Hong Kong's protests, angering Beijing. 6 years on, the NBA China Games are back, but now in the Chinese gambling hub of Macau through a multi-year deal with Las Vegas Sands.
There's a lot going on with basketball in terms of its future potential, but I think it's going to be investment-led. And I think there's a huge opportunity here in China.
Simply put, China is a market that's too big for the NBA to ignore. And for China, the NBA is too popular for it to ignore. S&P says a staggering half of China's adult netizens watch NBA games online, including one NBA player who's from China.
I feel blessed, be a part of this family. Since I was a kid, I was watching on the TV. Right now, it's like a dream come true for me.
From my perspective, it's always been an extreme amount of love. I have, a tremendous amount of respect for, the country of China, and they have the same for us.
A sentiment echoed by former football great David Beckham, who was on hand as a multiple brand ambassador in China and told me he believes sports has the ability to break down barriers. Soft power, if you will.
My connection started a long time ago with China. And every time that I go into a new country, a new city, I jump into the culture straight away. So it's about the food, it's about the people, it's about the fans.
This year's NBA China Games in Macau feature two teams that, while they've come close, have actually never won the NBA title. But there may be another prize at hand, and that is winning over fans for their teams in the Greater China region, especially now that the former Houston Rockets center Yao Ming has been out of the league for more than a decade now. The two teams are the Phoenix Suns at the far basket and also the Brooklyn Nets. Oh, by the way, the Nets are owned by Alibaba co-founder Joe Tsai.
Yao Ming is no longer with the Houston Rockets, and I'd rather spend more time in New York than in Houston, and I'm gonna make the Nets China's team.
Call it a draw on China bragging rights as the Nets and Suns split their two games here at the Venetian Arena. Stephen Engel, Bloomberg News, Macau.
Well, staying with the push for sports in China, Adidas sees Washington's fresh tariff threats against Beijing having little impact on the company's global strategy. CEO Bjorn Gulden says while uncertainty remains a concern, 80% of its business is outside the US. Gulden also says the company is reallocating products to minimize costs.
We used to design a lot of products, especially in Europe, and then produce them in China. What is new is that we design a lot of the products now in China. We have a lot of talented designers and product people here. So the models have changed. I would say that more than 60% of the product we sell in China are now designed in China. And of course, we also try to produce it in China.
Well, trade tensions are going to be the focus across markets. We've got Taiwan opening next in just under 5 minutes from now. You can see a huge sell-off. That's the ADRs for TSMC over the past few sessions, but certainly really reflecting President Trump's latest trade rhetoric toward China. Also concern around rare earths, export controls and what that means as well. So we will be watching that stock very closely as we see tech stocks already selling off in Korea. More ahead.